Welcome to the Washington Elementary School District. I'm Katie Sanchez, your insurance coordinator. This presentation will review the 2017-18 benefit package available to employees. The 2017-18 benefit package includes medical, dental, vision insurance, short-term disability, optional life insurance, flexible spending accounts, both medical and dependent care, and health savings accounts. The effective date of your insurance is going to depend on your official start date with the district. If you start between the 1st and the 15th of the month, your insurance will start the first day of the following month. If you start between the 16th and the 31st of the month, your insurance will become effective the first day of the month following 30 days of employment. Just a reminder, failure to enroll within 31 days of your start date will result in you forfeiting your right to benefits for this plan year. WSD is a self-insured medical plan, meaning we do not purchase insurance policies from an insurance carrier. A self-insured group plan is one for which the employer assumes the financial risk for providing health care benefits to its employees. The WSD Employee Benefit Trust, also known as the EBT, pays for each claim as they are accrued instead of paying a fixed premium to an insurance carrier to cover a member. By remaining self-insured, the district has more flexibility regarding plan options and premium costs. The EBT has a contract with Meritain Health to administer all medical claims. This means all medical claims are submitted to Meritain, and then Meritain authorizes payment from the EBT's bank account. Meritain Health strictly adheres to the district's plan document when administering medical claims. The EBT also selects and contracts with provider networks for all of WSD medical plans. A network is a group of providers that has a contract for negotiated rates of services provided. We will review the networks a little further in this presentation. All medical plans come with $20,000 worth of basic life insurance through Aetna Life Insurance Company at no additional cost. Employees who wish to opt out of medical coverage are still eligible for free basic life insurance by simply selecting the waiver option. WSD is pleased to offer 3 medical plans for the 17-18 plan year, one of which the plans are at no cost to the employees and the other 2 have monthly premiums. Let's take a look at the first plan available. The PPO plan offers both in and out-of-network coverage. The in-network coverage for the PPO plan is through Aetna Choice POS 2. To obtain the least amount of out-of-pocket expenses, employees should always try to stay with an in-network provider. The PPO buyout plan has copays for doctor visits, $25 for primary care physician, and $50 for specialist. The plan has an in-network single deductible of $1,500 and a family deductible of $3,000. You must reach your deductible before your coinsurance takes effect. Once you meet your deductible, the plan will pay 80% of services that applies towards your deductible, and you will be responsible for the remaining 20% of the charges. For example, if you are going to have an outpatient surgery, you would pay the first $1,500, the deductible, and then the plan would cover 80% and you would pay 20% of the remaining cost of the bills. The plan features an out-of-pocket maximum of $4,500 for single coverage and $9,000 for family. An out-of-pocket maximum is the most that you would pay excluding the premiums you paid to have the plan before all services were covered at 100%. The PPO buyout plan offers wellness and preventative care services covered at 100% in compliance with the Affordable Health Care Act. This is true for all 3 medical plans offered by WESD. Wellness and preventative services include things such as an annual physical, childhood vaccination, baseline mammograms annually covered for women 40 years and older, an annual gynecological exam with a pap smear, and a colonoscopy to screen for cancer once per year for adults ages 50 and over. Be sure to review the plan document for exclusions and limitations on the wellness and preventative care benefit. The PPO plan has a $200 copay for emergency room visits and a $50 copay for urgent care visits. Both of these services also go towards your deductible and have a coinsurance. The PPO buy-up plan offers a mental health benefit with copays dependent upon the number of visits you have per plan year. The plan also offers prescription drug coverage with copays ranging from $10 to $100. The copays for prescription drug is dependent upon the formulary categorization of the drug and if the drug is purchased at a retail location or purchased through mail order. Please note that some prescription drugs require mail order service. This is true for all of the medical plans offered by WESD. The next plan is the Banner Health Network Plan, formerly referred to as the ACO plan. The Banner Health Network Plan only offers in-network coverage through the Banner Health Network. The Banner Health Plan has copays for doctor visits, $25 for primary care physician, and $50 for specialist. The plan has an in-network single deductible of $1,000 and a family deductible of $2,000. You must reach your deductible before your coinsurance takes effect. Once you meet your deductible, the plan will pay 80% coinsurance for services that apply towards your deductible, and you'll be responsible for the remaining 20%. The plan features an out-of-pocket maximum of $4,000 for single coverage and $8,000 for family coverage. Once the out-of-pocket maximum is met, the plan will pay 100% of all services covered on the plan. The Banner Health Plan offers wellness and preventative care covered at 100% in compliance with the Affordable Health Care Plan. This is true for all three medical plans. Be sure to review the plan document for exclusions and limitations on wellness and preventative care benefits. This plan has a $150 copay for emergency room visits and a $50 copay for urgent care. Both services also apply towards your deductible and have a coinsurance. The Banner Health Plan offers a mental health benefits with copays dependent upon the number of visits you have per year. The plan also offers prescription drug coverage with copays ranging from $10 to $100. The Banner Health Network is primarily only located in the Phoenix metropolitan area. The network does not have providers outside of Arizona and are very limited outside of the Phoenix metropolitan area. The third plan is the High Deductible Healthcare Plan, HDHP, with an HSA plan. We will go over the HSA in the next couple of slides. The HDHP plan offers both in and out-of-network coverage. The in-network coverage for the HDHP plan is through Aetna Choice POS 2. To obtain the least amount of out-of-pocket expenses, employees should always try to stay with an in-network provider. The plan has an in-network single deductible of $2,600 and a family deductible of $5,200. You must reach your deductible before your coinsurance takes effect. Once you meet your deductible, then the plan pays 80% for services and you will be responsible for 20%. This plan does not have copays. You pay the full contracted rate of services until your deductible has been met, and then the plan will pay 80% for the services and you're responsible for the remaining 20%. The plan features an out-of-pocket maximum of $5,200 for single coverage and $10,400 for family coverage. Like the other two plans, the HDHP plan offers wellness and preventative care covered at 100% in compliance with the Affordable Health Care Act. Be sure to review the plan document for exclusions and limitations on wellness and preventative care. The plan also offers prescription drug coverage. Generally, the drugs on the HDHP plan goes towards your deductible and then are paid at 80% once you've reached your deductible. However, there is a preventative drug list. Preventative drugs are payable with copays ranging from $10 to $100. The list of preventative drug medications that are payable with copays can be found under Resources on Employee Self-Service. This plan comes with a health savings account, aka an HSA. The district will contribute $800 towards an employee's HSA. The $800 will be prorated based on how many months of coverage you have during this plan year. The HSA monies can be used to assist you with paying the higher out-of-pocket cost on the high-deductible healthcare plan. As previously stated, the district will contribute $800 towards an employee's HSA. This is prorated based on the months of coverage during this fiscal year. The district's contributions will be funded on a biweekly basis. Once the contribution is made, the funds belong to the HSA account holder. If an employee on the HDHP HSA plans change plans at a later date or severs employment with the district, they take their HSA and the funds in it with them. You could continue to use the account to pay for qualified medical costs even if you're no longer on the district's HDHP plan. Funds in an HSA roll over from year to year. You never lose your contributions. An HSA is an interest-bearing account that once your balance reaches $2,000, you can start investing your funds to earn additional money. Employee contributions towards an HSA are optional, but highly encouraged, and employees can change their contributions on a monthly basis. This allows for flexibility to add more money to your HSA if you know you have an upcoming expense in the future. HSA accounts have annual contribution limits that change every year. However, there is no minimal contributions. The annual contributions include both the employee and the employer contributions. Also, account holders aged 55 and over can make an additional catch-up contribution of $1,000 per year. The IRS has eligibility requirements to open and to contribute towards an HSA. It is the individual's responsibility to ensure that they meet the IRS eligibility requirements to have an HSA. To be eligible, an employee must be enrolled in a high-deductible healthcare plan, have no other medical coverage except which is permitted as other health coverage, not enrolled in Medicare or Medicaid, and they cannot be claimed as a dependent on someone else's tax return. To learn more and to check the eligibility requirements, please refer to page 30 of your new hire benefit enrollment guide. A side-by-side comparison of all three medical plans offered by WSD can be found on page 6 of your benefit package. The comparison will show you the monthly premiums associated with the plans. The per paycheck costs can vary. The per paycheck deduction depends on how many months of coverage the employee has in a plan year and how many paychecks are remaining when your elections are processed. Employees who work a less than 12-month work calendar typically have deductions taken out of a 19 paychecks and prepay the summer months of coverage. Employees who work a 12-month calendar typically have their deductions taken out of 26 paychecks. An example of a 19-pay employee cost for someone who began work at the beginning of the new plan year and they elected the PPO buy-up plan, which is a $150 a month premium for single coverage. We would take their $150 a month premium, multiply it by 12 months of coverage to come up with an $1,800 premium owed for the plan year. The annual premium would then be divided on 19 paycheck deductions to come up with a per paycheck deduction of $94.74 per paycheck. If an employee is hired mid-year, the per paycheck premium would reflect a different amount because the number of cover months and deductions would be reduced. Choosing a medical plan is an individual decision. All three plans have pros and cons. The plan that works best for one person or one family may not work for you and your family. Some important things to consider are the prescription drug coverage. Do you take daily medications? Are they covered on the high deductible healthcare plan as a preventative drug, or would you be paying the full cost of that drug? Is your doctor in the network, or would you be required to switch doctors? Do you have dependents outside of the coverage area? How would their claims be processed? Are you expanding your family this year? Are you anticipating any surgeries? Not one plan is going to be better over another. It's all an individual choice of how you'd like to pay for your health care insurance. As previously stated, all of WSD's medical plans come with a $20,000 basic life insurance policy at no additional cost. Administrators receive 1 times their base salary as a basic life insurance policy. Employees may elect to waive WSD's medical insurance but enroll in basic life by selecting the waiver option on the insurance benefit enrollment form. Employees who are enrolled in basic life can also elect to purchase supplemental life insurance. Supplemental life insurance is an optional benefit. New hires have a guaranteed issuance amount of $100,000. This means you do not have to do a medical questionnaire and be approved for the coverage. If an employee waives supplemental life insurance at the time of their hire and elects it during open enrollment, or increases their election during open enrollment, the new election and the increased election amount would be subject to an evidence of insurability. Employees who elect to purchase supplemental life insurance on themselves can purchase supplemental life insurance on their spouse and children as well. WSD also offers dental insurance through United Concordia. We utilize the Alliance Network for our dental insurance, and dental covers preventative services twice a year. All other services are applied towards a $50 single deductible and or the $150 family deductible. The plan maxes out at a $1,000 benefit per year. Single coverage is no cost to the employee, and family coverage can be purchased for a monthly premium of $40.87 per month. Please note that WSD's dental plan does not cover orthodontics coverage. WSD offers 2 flexible spending accounts, a medical flexible spending account and a dependent care flexible spending account. Both accounts allow you to have monies taken out of your paycheck on a pre-tax basis for qualified reasons. By doing so, this lowers the amount of taxes you're paying and allows you to pay for services on a pre-tax basis. The medical flexible spending account allows up to $2,600 a year to be elected and used for qualified medical expenses. Qualified medical expenses are items such as copays, prescription drugs, and anything that would be covered on your medical, dental, or vision plan. To view a complete list of qualified medical expenses, you may review IRS Publication 502. Employees participating in a medical FSA will receive a Visa card that can be used at the point of service to pay for the qualified expenses. Members will be required to keep receipts and provide them to Health Equity if requested. Up to $500 of unused funds in a member's medical FSA can be rolled over at the end of the plan year if the member re-enrolls in the medical FSA during open enrollment. Unused funds greater than $500, or if a member does not re-enroll in a medical FSA, are lost to the member. The Dependent Care Flexible Spending Account allows members to elect up to $5,000 a year to be used to pay for qualified daycare expenses for children under the age of 13. Participants in a Dependent Care FSA can elect for automatic reimbursement if they pay the same amount every month. The Dependent Care FSA is a use it or lose it account. Unused funds in a Dependent Care FSA do not roll over and are lost to the participant if you do not utilize them. WSD also offers vision coverage through Avisus Vision. This benefit can be used 1 time a year and gives you an allowance for frames and will pay up to $130 for contacts. WSD also offers short-term disability. Short-term disability is a voluntary benefit an employee may elect. Short-term disability is a loss of income protection plan. If an employee becomes sick or injured due to a non-work-related injury or illness, short-term disability will pay a percentage of the employee's annual income to the employee while they are unable to work. Short-term disability does have a 2-week unpaid waiting period before benefits are payable, and then the benefit can last up to 180 days. Short-term disability is paid off calendar year, not off of an employee's work calendar. So a less than 12-month employee may still collect short-term disability during the summer months. Employees may elect 40, 50, 60, or 66 2/3% of their weekly salary as a benefit, and the premiums are going to be dependent on the employee's salary and benefit election amount. Short-term disability does have a 12-month pre-existing exclusion, meaning if an employee has been seen or treated for a condition in the 12 months preceding the election or effective date of short-term disability, short-term disability could deny the claim. New hires are not subject to an EOI during their initial eligibility requirement. However, if an employee lacks coverage during open enrollment for the first time or increases their original election during the open enrollment period, this new coverage would be subject to an EOI and would have to be approved through Aetna. Government regulations require that your plan remain in effect throughout the plan year. Once elections are made, you cannot make changes to your elections until the following year's open enrollment unless you experience a life qualifying event. If you experience a life qualifying event, you may be able to make changes to your elections mid-year. To request to make a change, you must contact the insurance department within 31 days of the event. If you do not request a change within 31 days of the event, you will forfeit your right to make changes mid-year. For more detailed information regarding qualifying events, please refer to the plan document located under Resources on Employee Self-Service. As a reminder, you must submit your benefit election forms within 31 days of your start date. If you do not submit your benefit enrollment forms, you will forfeit your right for insurance and not be eligible for insurance until next year's open enrollment. The best way to select a plan is to educate yourself on the options and review your own personal situations. Employees may access additional resources under Employee Self-Service as well as on the intranet. Remember that this presentation is an overview of the plans offered by WESD. The plan documents provide more detailed information regarding the medical benefits and can be found under Resources on Employee Self-Service. Thank you for taking the time to view this video and taking the first step to educating yourself on the 2017 benefit options available to you.